I know this is a very strange take, but when you are trading, you should avoid exiting your trade using a take profit. So I'm going to just briefly explain that. So let's say you are executing your trade maybe somewhere around here. Let's say you execute a buying trade all the way here. And when you execute a buying trade, you'll obviously maybe put your stop loss all the way below, and then maybe put your take profit all the way maybe around that high there. So you'll use this high. Okay, let me show. You'll use this high as your exit point, and you'll use this low as your risk point where you'll position your stop loss. But then as the price continues to move, you see that the price reaches your target, and then it doesn't reverse, but it just slows down, and then it continues moving up. So you as a trader, when you exit your trade here, actually what is happening is that now as the market continues, you are actually missing out, meaning the market was offering you more, but you decided to take less. Why? Because you only relied on this level. So what you should be doing instead as a trader is that once the market starts moving on your side, or once the market starts moving on your favor, you should keep on moving your take profit. What I always say is that your take profit should always be there to assist you if you are not watching the market. But if you're watching the market as a day trader, you shouldn't close your trade using a take profit. But what you should be doing instead, you should be trailing your stop loss, meaning as the market continues to move up, you move your stop loss, So there are a few ways that you can do this. You can do this either by using patterns or by using points. So when I'm talking about patterns, I mean that you can actually focus on market structures. For an example, here you can see that we had our low here, and then as the market moved up, it retraced a bit and then continues to move back. So you can use this small structure as your position, as your next stop loss, meaning as the market moves, you move your stop loss all the way there, and as it forms this corrective, you move your stop loss all the way below that corrective. But you can also use points. For example, you can say, okay, after the market move maybe 10 pips, I'll move my stop loss. So your stop loss will be trailing with 10 pips or 20 pips, whatever that you are risking. So you allow the market to actually give you as much profit as it possibly can. So as you are trailing, then the question is, okay, I am not exiting using take profit. How then am I going to close the trade? So there are two ways. The trade can be closed by the trailing stop loss, or it can be closed when you see a decline in strength. So you observe in terms of the strength. So I will try to figure out an example here. Okay, I'm sorry about that. I'll try to figure out an example. See if I can get one. So here, as you can see, let's say you are executing a selling trade. I'm just gonna start from just any place. Let's say you're executing a selling trade all the way there, and then the market moves down, you move your stop loss. The market moves down, it forms it forms this corrective, you move your stop loss. And as the market continues, it gives you this other corrective now. So as you can see, if I can just pay attention to the corrective, you can see the first one, it is smaller. The second one, it is a little bit bigger. And then this one is huge. So as the market goes down, then you know that after these corrective, you know that you have to close your trade, because it's likely that we're going to receive huge buyers movement as you've seen here. So you exit your trade all the way about there. Let's say you're executing a trade here, maybe your take profit is going to be here, so you're going to close your trade here and you're going to be limiting yourself, but now you're going to close the trade all the way below in this area, because you see that this corrective is taking longer. So that's what you can do. Focus on the market structures, but I don't say that open your trade without a take profit. The take profit should be there, but it shouldn't be the primary means of exiting your trade.